Hey everybody, Smart Silver Stacker here. Hope you're doing well. So today is definitely one of those days where we are reminded that silver is not an asset for the faint of heart. Big swings up, big swings down today following the release of the personal income and outlays data from the Bureau of Economic Analysis, I guess are the ones who released this. Also, the PCE price index, a critical measure of inflation data that the Fed really takes into account. But the thing about it was that today, all of the data that was critical regarding inflation, it was all in line with expectations. And yet that was released early this morning. You can see initially there was a big run up in the price of silver. Now, near the close, we are at 30.41. So down 3.5% on the day. What does this mean moving forward? Well, honestly, it's kind of a mixed bag. One thing that I will say is that the $30 level is a very, very important level of support. It's the highest silver has traded in over a decade. And if we manage to close the day above $30, that could be very significant for silver. We got about 25 minutes to go, and there is a battle on right now between the long and the short side of this market. I want to examine the chart here a little bit, and then I've got some news to cover with all of you today as well. But let's just point out some of the somewhat ominous signs on the silver chart right now. This doji that you see here on the weekly chart of silver, that is a gravestone doji. That can be an indication of a reversal in a bullish trend. So that is a little ominous for the price here. Also, if we zoom out to the daily chart, that is looking like a bit of a double top. So that could also be a slightly ominous formation in the silver price chart here. And yet, $30, that is such a critical level. If we manage to close above that, I think we can still say that the breakout here in the silver price, the rally in the silver price is intact. If in the next 25 minutes we drop below 30, well, that could mean that there's going to be some downside in the price of silver in the short term. But, all of this really doesn't negate any of the long-term factors indicating that silver will be heading much higher. In fact, as long as the $26 level holds, that means that the breakout that we are in the midst of from a technical standpoint is largely still intact, right? The $26 level here, let me draw this line, is where this breakout started, right here. And as long as that price holds, I don't think we have much to worry about in the medium term. But there could be some, decline in the price of silver here. I think as long as we hold above $30, though, that's going to mean that the rally is still on. So again, we've still got some time before market closes. This could be a significant price movement. Now, this weekend, there is going to be a good opportunity to get some cheap silver. And I want to point this out, one, because SD Bullion is today's video sponsor. You can get silver over there. It's why I buy mine. I'm thinking about buying some junk silver this weekend. But also, the fact that you can get a $100 face bag of junk silver right now for 79 cents over spot, it indicates that this is still really a buyer's market, right? Their premiums on physical metal are not rising. And you got to understand that the demand for retail bullion silver products like, 1 ounce bars, 1 ounce coins, junk silver, all this stuff, it's not driven by the same factors that drive the spot price. So that's just something to keep in mind. It seems like with the breakout, I think a lot of retail investors are actually coming into the market and selling their physical metal. And you can tell that by just looking at the sell page at sdbullion.com/sell. You can see right now, this tells you what kind of premiums SD Bullion is paying. If you go to sell to them, right now they're paying $2 over for Silver Eagles, 50 cents over for Maple Leafs. But look at junk silver. Bid price minus 150. Bid price minus $1 for $0.50. This is clearly a buyer's market. So I don't think it is the time to unload any physical metal. And any dips in this market will be buying opportunities. Let's get into a little bit of the long-term fundamentals and some of the news. I mean, I think that pretty much covers it for the technical picture here in silver. If we close above 30 bucks, we're probably going to see, a run to new all-time highs in the relatively near future. If we close now below $30, that could, spell a little bit of pain for the silver price here soon. And I also just want to mention real quick why today is so important. It's Friday, so it's wrapping up the week, but it's also concluding the month. So if we get a monthly close above $30, that'll be the first time that has happened in over a decade. That will be very significant. And I think that is more important than perhaps some of the more negative aspects of this silver chart. And actually, before we get to the news, let's just hit up the AI technical analysis real quick. This Chart Eye app. Now, this is happening in real time, so I don't know what this is going to say, but this will take a peek at the silver chart that we were just looking at, and it'll give us an idea of what it thinks from a technical standpoint. So it says the chart indicates a significant upward movement in silver futures. Check. The price has recently experienced a pullback after reaching a peak around $31.94. However, it finds support at approximately $30.38, a previous resistance level, which is now turned into support. The high trading volume indicates the upward movement signifies strong buying interest. Bullish or bearish? Currently, the chart suggests a bullish trend due to the following reasons. The instrument is trading above a significant resistance, $30.38, now acting as support. High trading volumes during the rally indicate solid buying momentum. Okay, so the AI here that we've been using on recent videos to analyze the silver chart still has a very bullish picture. Maybe we should run that again after the close and see what it says. But let's get into some of this news. So this is a story that caught my eye from Bloomberg. Russian firms turn to crypto for commodities trading. This is interesting. This is really interesting. Now, we've talked in the past about a potential gold-backed stablecoin cryptocurrency that Iran and Russia have been working on to facilitate cross-border payments. But apparently, according to this article from Bloomberg, Russia is now using Tether, a dollar-backed stablecoin. This gives you maybe some clue as to why. Ivan Kozlov, an expert on digital currencies and co-founder at Resolve Labs, says that with stablecoins, transfers may take just 5 to 15 seconds and cost a few cents, making such transactions pretty efficient when the sender already has an asset base in stablecoins. So this is interesting because they're using Tether, a dollar-based stablecoin currency, to kind of skirt sanctions from the West. These Russian banks, they've been kicked out of the SWIFT system, out of the Western financial system, and so now they're using cryptocurrency technology to facilitate cross-border payments without actually having to use dollars. So one thing I take away from this immediately is that, Tether should probably watch out from regulation and scrutiny from Western governments if really this makes skirting sanctions, feasible for the geopolitical enemies of the West, but also that this is just one more step towards de-dollarization, right? Because even though Tether is backed by the dollar or tied to the dollar in some capacity, it's not the dollar, right? So if cross-border payments begin shifting more and more to these stable coins or CBDCs, that is going to pose a threat to the dollar status as the world reserve currency and its primary role as the currency for international cross-border exchanges. On this same note, there was another story which caught my eye from the Global Times here. Thailand aims to become the first BRICS member in Southeast Asia. So Thailand is applying to join BRICS. Why is this important? Well, this shows that the Global South is continuing to grow the BRICS organization. It's getting bigger. More and more parties, such as Thailand, are interested in avoiding being under the thumb of Western sanctions should they choose the wrong political side or, whatever, they upset the bankers in the West. They're going to want options, and that's why we're seeing the BRICS expand. And, the cross-border payment thing, that is something that the BRICS nations, they've been talking about two things primarily. One is expansion, so that's continuing. Excuse me. And also, they have been talking about switching away from dollar as a currency. So both of these trends are well underway and they continue, even though, you get these news points like, okay, BRICS conference 2023, it expands. Saudi Arabia is in now. Egypt's in. The UAE is in. But then we kind of tend to forget about it. But, this sort of thing continues, right? It continues to evolve. It's not a trend that has gone anywhere. And so, this supports gold and also the price of just commodities generally, especially ones priced in dollars moving forward. And we can't forget that there is talk of a cryptocurrency backed by gold. That'll cause the price of gold to skyrocket if anything like that gets any kind of traction. This is from Forbes from last year, where they're talking about all these reasons why cryptocurrency is unlikely to help Russia and Iran evade sanctions. Specifically, they mention the gold-backed stablecoin, which their central banks are working on. And Forbes, Western mouthpiece in this case, I would imagine, I don't think that they're an unbiased source any more than the Russian or Iranian sources are unbiased, but, they're trying to poke holes in this idea that they're going to use stablecoins. Well, now we're hearing from Bloomberg a year and a half later that that's exactly what Russia has begun doing, is using stablecoins. Yeah, not gold-backed yet, but, you see stories like this and you think maybe this is the reason that the central banks of all the BRICS nations are buying up record amounts of gold. And the cross-border payment system is well underway. Hey, Tom. Hello. Hello. Tom says hello. Smart Silver Stacker from Michigan. Thanks to everybody, by the way, who's tuning in today. It's a bit of a nail-biter with the price of silver today. I know. I do appreciate everybody joining in on this live stream. Do me a favor, smash that like button, subscribe to the channel if you haven't done that yet. And this one from CoinMarketCap. UAE completes first cross-border digital dirham CBDC payment worth $13.6 million to China. This is from earlier this year, but this, I just want to point out, it's not just Russia, it's not just China that is utilizing these digital cross-border payment technologies. It's not just Iran. The UAE, who, as far as I know, is not subject to sanctions by the West in any significant way, is also looking to preempt perhaps the need for circumventing sanctions by simply creating a decentralized payment system that they have more control over, not relying on the SWIFT system and dollars from the West. And this is something that we've been hearing about for a long time, but now it's really beginning to manifest itself in, the unlikely candidate of Tether. I think it's very interesting that the nations subject to sanctions are using dollar-based stablecoins. Leave me a comment down below to let me know what you think about that. It's certainly an ominous development, I think, for the dollar, and it's a little bit of a portent of what is to come, but it also shows how the dollar, it's not the sort of thing you can replace overnight, right? If you can't use dollars, you use the next best thing, a dollar stablecoin. So certainly the de-dollarization trend is part of what is driving the rally in gold and silver, but this trend is not going to play out overnight. It's going to be years, perhaps decades, before the dollar is supplanted as the primary currency for international trade. But that is the direction that the winds are blowing, and I see nothing to indicate that trend will get reversed anytime soon. Let's take a look at the price of silver here. We got 13 minutes to go before close. It looks like $30 is holding steady. And again, if that happens and we close the month of May above $30 here shortly, that is going to, I think, be an indication that the rally is still on. But we'll have to wait and see. The fact that you can still get silver bullion, though, at a low premium and in this market really indicates that we are early along in this rally. As soon as retail investors become getting interested in physical metal, that's going to be the moment when perhaps it's too late to be doing any stacking. But we're still very early on in this rally. And honestly, I feel like the fact that we're down 3% today is kind of a gift. I know probably a lot of people watching were looking at the peaks here when silver was popping above $32 twice in the past couple of weeks and probably thinking like, man, I missed out. I wish I had stacked while it was cheaper. Well, here's your chance. So again, let me know what you think in the comments down below. Stay safe, everybody. Happy stacking. Have a great weekend, and I will catch you next time. Smart Silver Stacker